All right, we're going to start in 5 minutes. Time to reload your coffees, bro, and ladies, and germs. Oh no, a Windows update. It always reconfigures all my monitors for me. Oh wait, it might actually work. Guten Morgen. All right, ladies and germs. Ni hao ma, Jumbo. Ohio. Hola. Welcome to Forex.Today, y'all. All y'all. Where we plan our trades in advance because trading is risky. It's not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. It's very nice to meet you. We have a very special day today. Yes, we have our normal technical and fundamental analysis that we need to do. But today is the day, the 2025 annual outlook, and I decided to make things a little different this year because, well, I think our biggest concerns are what are not the normal, basic, straightforward economics of the world. Now, we'll cover some of that to understand where we are in the business cycle. But really, you want to know, what are we going to do if Trump does this? What if we do if Trump does that? And so the only way I can do this without giving you an opinion is to go back into the past. So I have probably 6 or 7 different versions of this presentation, all completely different from each other. And I decided to go with this trade wars versus monetary policy framework where we can go back into history year by year, but even month by month, this happened, then that happened, and here's the consequence to all these things. And so really, it's a history lesson to use as an allegory for how the market would likely to react to certain things in the future. So I hope you appreciate that. There was a bunch of, like all these other different iterations, because I don't know. There are many ways to say things and how to say things. And so that's what I came up with, or what I chose. I actually went back. I looked at different presentations and I'm like, how do I want to present this? And so I decided on this one to help us have a conversation about the future. But again, I don't want you to have some YouTube guru's opinion. So instead, I went through the past and I'll show you what things happened and how the market reacted, the similarities and the differences, and now we know how to read certain events in the future in the market. Okay? So I hope it works. I hope it's coherent, because I think I had 200 slides and I got it down to 30. Which means I don't even remember what I deleted because there's too many slides. So anyway, I'm excited. It should be a lot of fun. And it's today at noon, which is 4 hours from now. The link is in the description below. Does anybody have that link? You know what? I might have it saved in my memory. Not my brain, but my computer's memory. Tradars.com. It would be a product. No, it's an offer. Offer. And yep, found it. All right. So here's the sign up. So it's 4 hours from now. That's that. So what I've done in the past is I just gone through lots of Fed economic data. I'm going to do that. I've set some stuff up. I'll probably add some more. And so we will still discuss that kind of stuff. We'll still go to the Fed. We always have Tradars, so I don't need to go back and reinvent Tradars through the Fed. But I'm going to do that a little more quickly, and then we can go in and use the history lesson as a dialogue. And also as a reminder of what happened so we can better understand the future. So anyways, that's that. That's happening. That's going down. Yep. Cool, right? Yeah, I think so. Yes, there will be a recording. That's probably the number one question. Yes, it'll be recorded, and you have 7 days to watch it, and then it'll self-destruct. Can we have a look on demographic? Please, Abdul, expand on your question. I'm not sure what you're asking. Okay. Whoa, whoa, whoa. See? It's pretty, right? Oh, my God. Oh, my God. Oh, my God. Look, it's good. It's good. You're going to like it. You're going to like it a lot, I hope. Yeah, Investor Bootcamp is still operational. It just shows you the video courses that you paid for. Everybody else is over at Tradars.com. I started to rebrand Investor Bootcamp, but my developer is, how do you say it? Slow, I think is the nice way of saying it. And you can interpret that a couple of ways. So I just haven't made it a priority to rebrand it because I got other priorities. Yeah. Okay. All right. So thank you for being part of this community of 20,000 foreign exchange traders. Cool. We can also do some crypto. We can do futures like gold and oil. We can do stocks and stock indices. Tradars does all of that, and it does it in an automated fashion. Dare I say AI? Yeah, sort of. It's more of an automated than AI. But it's kind of, depending. Now, if you're an AI developer, you would say it's not AI. But for everybody else, well, it does a whole bunch of crap for you, so it seems like AI. Yeah, okay, somewhere in between, right? But the thing is, I can go through 7,500 charts, only look at the things I want to see, and only the patterns I want to trade. And so I can go through 7,500 charts, and it'll take me 2 minutes to find, I don't know, the 5 patterns that I'm interested in maybe trading today. And all the other 7,490, let's say, 95 charts are not worth my time. So stop wasting time. I can make more money, but I can't make more time. So for me, time is of the essence. It is. So that's one major benefit. Why? I don't have time to waste. Ooh. I'm going to have to reboot my machine because I noticed a couple of other things that are happening that are odd. Not on our site, I think on all sites. Oh, it's got to be the new Microsoft update that crashed my machine behind me. Oh my God. As soon as I said that, I can hear my hard drive freaking out. Wow, what the hell is going on there? Wow. Well, I'm going to have to reboot this machine before our Prezi today. So it's on our fundamental server. Now, if we also see glitches on the technical server and the calendar server, then I'll know it's me and not the server. All right, so this is really glitchy. I bet your scorecards are going to be similar. Huh, interesting. No, that's fine. Well, let's just zip over to our technicals then. Yeah, okay. So maybe it's Google then. Can demographics affect the stock market? Well, demographics are a long period of time. I hear my cat. My cat might be freezing. Sorry, we were talking about cats, and now I hear my cat. Yeah, in the long run, okay. So older people tend to invest, younger people tend to trade. So you could have different changes in volatility. You can have changes in asset class. Older people probably prefer less risk and steady income. And younger people probably want to go after capital gains. There's a lot of different things there that can change for sure. But then if you're talking about not just the stock market, but just the economy in general, yeah, younger people tend to work for less. Older people tend to need more money. Young people tend to buy bigger and bigger and bigger houses, where older people tend to sell bigger houses and buy smaller houses, and all that kind of stuff. Does that affect things? Yeah, so yeah, it affects wages and growth and all that kind of stuff for sure. So China is going to have a massive problem very soon. On top of they're slipping into Japan's, remember what happened to Japan in the 80s? Its real estate market was booming. And then for 25 to 30 years, it did nothing. China is probably rolling into something like that. But also Japan has a demographic problem, which the population's getting older, older, and older, and older. Well, because of the one-child policy, China's getting older and older and older and older very quickly. So one of the things I said, 5, 6, 7 years ago is that India is going to win this game. They don't have that demographic problem. And also, India is starting to benefit from increases of education. So you're going to see increase in standard of living. You're going to see smaller family sizes, because you don't need 8 kids to work on a farm if you're going to live in a city, and all that kind of stuff. So wages are going to go up. You're not going to have India with 2 billion people. In fact, what I think you'll see is in 20 years from now, they'll drop back below 1 billion. So you're going to start seeing India's population declining, not expanding, but the demographics staying young, not getting old. But they'll have higher productivity, higher levels of education, higher levels of healthcare, or better levels of healthcare, and longer life longevity. And does that impact the Indian economy in general and their stock market? Yeah, absolutely. Okay. Hang on, it's freezing outside. Let me see if my cat's in trouble. Let me be kind to my animals. Give me 30 seconds. Be right back. it's true, old dreams. Deep down inside I hear my screams. But this terrible silent stuff. Yeah, so he was freezing, but he was in my Mojo Dojo. Yeah. Yeah, it's nice in there. Yeah, thank you, Abdul. Cool. So anyways, what do you want to trade today? So one of the things we did yesterday, maybe we'll just follow up with yesterday. We said, hey, Kitty Cat might get strong. Fundamentals? No. Technicals? No. Geopolitics? Yes. So I isolated CAD. Kitty cat, 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 kitty cat. So we isolated kitty cat. The second thing is I said, you should only consider buying the CAD. We call that bias. In this case, what we're just saying is maybe a relief rally. Nothing economically has changed. Nothing financially has changed. They just have a change in politics coming. So we said, well, we can look at some trending chart patterns. That's it. I want trending. So I isolated everything. And what's happened since? CAD is strong. CAD is strong, 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 and CAD is strong. You're welcome. Okay, so that was yesterday. We set it all up. Hopefully you knocked it all down. I don't know. I don't know what you did. Maybe you like to trade euro dollar every day, no matter what happens. I don't know. Is USD strong? Yeah. So there's trades there for sure. But I'm showing you how to use your technical radars properly. You're the boss. These are not signals. If you look at these as signals, you've already failed. You're not even thinking about it properly. You're not even going about it properly. Okay. So if you wanted to buy CAD, you've isolated CAD, and now you have a bias, and now you know technical analysis. So this shows weakness, and it's an opportunity. Good. That came out an hour ago. You've already missed a lot of it, but it's still in play. Cool. This shows strength, but this is a threat. So no, pass. Okay, you want to sell this? Great. This shows weakness? Great. This is an opportunity? Great. Okay, 4 hours ago. So 4 hours ago, you got this alert. Okay, and the higher time frame now on the same trade agrees. So now you got the same, basically the same trade on two different time frames, right? But you got this signal, you got this pattern before that pattern. Okay, Kiwi CAD, you're a bear. Is this a bearish pattern? Yes, so therefore it exhibits weakness. Okay, and 5 hours ago, Tradars said, look for the next leg of the pattern is down, so that's an opportunity. That's probably something you've been doing the last 5 hours, right? Wait, you've been doing something else? Why? All right, so triangle breakout, and we want CAD yen to go up. Is this an opportunity? Well, we have to say, is this strength or weakness? It's neither. Is it an opportunity or a threat? Neither. Why? This is not a trend. Okay, a lower low, lower high is not a trend I want to get involved with. Okay, cool. USD Kitty CAD, we're interested in buying CAD, so that would be a sell. Okay. Down channel, that shows weakness. That's what we want. Okay, 5 hours ago, we said, right, our pattern showed that the next leg would kick off this bottom, head up, and then drop. So was that an opportunity? No, that was a threat. It fell off the moving average. Yeah, well, that's why you also use price action. This is pattern. It's not a signal. It's not thinking. It's not doing price action. You need to do price action. It's not doing pivot points. You need to do pivot points. This is showing you direction and opportunity. Based on the pattern, it's bearish, but no opportunity. Now, you might have overrode that because you said, well, I want to look at this, right? You're watching Aussie CAD, so you open it up and you're like, oh man, this is a great little roll reversal, little kick off the moving average. Great. It's not the pattern, but it's an opportunity there. But if you don't even know to look at Aussie CAD, then you're not going to see it. If you can't touch the ball, you can't catch the ball. You got to know where to be. Okay? Wayne Gretzky has to pass the puck in front of you, not where you are now. So you're like, oh, this is, right? Oh, that's a trend I'm looking at. I'm going to put that on my hit list. Aussie CAD 1 hour. Okay. Probably not set up, but you might recognize kick off the roll reversal. Cool. Anyways, on the longer term, oh, definitely Aussie CAD is right. Okay. So imagine this 13 hours ago. This one was a few hours ago, and it showed there was a likelihood of an upward move, even though you want to be a bear. 13 hours ago, which was, 24 hours ago, we looked at Aussie CAD, and I said, well, you want to look for opportunities to sell. Now, let me confirm that. I just want you emotionally, not just intellectually, but emotionally line up what I'm teaching with your reality. Okay? So please answer this. Yesterday, did we talk about the geopolitics of Canada and the likely increase in strength? It might have been Monday or yesterday. So in the last 48 hours, did we talk about possible strength in CAD based on politics? Yes or no? This is important for you to answer. I know the answer, but if you don't remember it, then it didn't happen. Okay? Now, if you don't remember, then uh-oh. Okay, great. So, 13 hours ago, Tradars said, hey, take a look at Aussie CAD on the daily. It's at a point for selling. Okay? There's the entry, there's the stop, so on and so forth. Sell it, let's say if it was 90, that's 200. So it's saying the next leg down is 150 pips. Not the target, really. It says target, but remember, okay, that's just the next down leg in a downtrend. It's not the end of the trade per se. You have to decide that. Where's the annual pivot? Where's the monthly pivot? Where's the weekly pivot? Where's the daily pivot? These are all decisions for you. But you see how kick butt this is? Do I want to look at CAD Yen daily? No. Dude, see how fast this is? Why not go long CAD Yen? Well, that's not a bullish pattern. But it says there's an up arrow, Wayne. It says up. Not really. Okay, we did get to an apex. That's great. I want it to make a higher high. And if it does, so if it makes it to that green box, I'm going to let it drop. And then I'm going to buy it off the roll reversal. And now, because I'm not trading the breakout, I'm trading the trend. Oh my God, that's so beautiful. And this, not interested. See how trading's not easy, but knocking through every CAD pair on every time frame and finding like 3-4 things to look at. for today and a couple of things that might set up for tomorrow. And I'm done. Dude, I'm done. I could just be done. That's my whole day. That takes you hours. It just took me, and I had to explain it. It would take me under a minute to do what used to take hours. Oh, okay. Cool, man. So let's turn them all off. What about dollar pairs? Okay, talk to me, Goose. You tell me, am I a bull or a bear on US dollar? What's my bias for USD? I'm going to turn them all on. I'm going to turn them all on, even emerging markets. We'll turn them all on. Does anybody know my USD bias C? Ojo says bull, bull, bull. Ojo, bull. Anybody else? Yeah, hope it's cold here. My cat jumped in my Mojo Dojo because he was cold. Yeah. All right, you guys are correct. Correctamundo. Dwayne, a bull. Okay, cool. So let's look at every dollar pair, including exotics, and we'll look at every one of them. So, right, let's take a look at this again. 1, 2, 3, 4, 5, 6, 7, 8, 9. So 45 charts. How long? Okay, I'm going to look at 45 charts, and I'm only going to look for trend trades. And I'm only going to look for trend trades in the direction of dollar strength. Reliable, repeatable, bullish patterns for buying USD. Okay, you ready? 45 charts, 3, 2, 1. This is strength, that's an opportunity. Okay, this is weakness, that's an opportunity. This is neutral, but I'll catch a dip on the break, which it looks like it's already broken. So now I do a roll reversal and buy it at, let's say, 58.5. USD Rand, okay, I want to buy dollar, so I look at this. This shows strength, and that's an opportunity. USD Swiss franc, that's strength, that's an opportunity on, right? This is shows strength, but that's a threat. Okay, let's go. We'll do the next one. USD Rand. Okay, USD Rand, that shows strength, but that's a threat. And pound dollar to the downside, that shows weakness. And there might be a little opportunity. I'll have to take a look. I'm done. 45 charts. Trading in my fundamental bias in the looking only for reliable, repeatable trend patterns. Done. Less than 1 minute, 45 charts. Holy. Okay, let's change this. I don't want to look for trends. I want to look for reversals. Okay. None. None. There's none. There's no reversal patterns. Oh my God. Never seen that before. All right, there's none. I just looked at every dollar pair on every time frame. And of the 45 charts, there are no harmonic reversal patterns. None. Huh. Well, hell's bells. Let's do everything but the basic, right? Let's do everything but the trends that I like to do. Save. All right, we got some action here. Okay, trade USD Mexican peso back to resistance. Yeah, see, I don't like that trade. That's why I turned it off. That's not something I'd like to do, but it is USD long. Great, trade back to the resistance. That does show USD strength back to the top of the range. Yeah, see, but I'm a trend trader, so I don't like that. See, what I like is I look at this as a role reversal. That's the pattern I'm looking for. Is this someone's pattern? Yeah. But I see this as the likely outcome. So I like it for CAD, but I don't like it on dollar. So I'd pass on this one, but great, fine. At least it was an opportunity. Kiwi, bottom of a range. So is this useful information? Yeah, I'd like it to come down, come up, and then I'll catch it this way. Okay, so tomorrow, that sets me up for tomorrow. I could put it on my to-do list and park that in the parking lot. USD Swiss franc looks like a breakout. Cool. Is that the direction I want? Yep. So the way that you plan this is you allow it to come up. You catch a little drop, probably right near the psych level of 91. Then you take it long later today or tomorrow. And then USD, do I want to sell this? Yes, I do. Is that a selling pattern? Yes, it can be. So it does show a breakout to the downside, right? So it did make a lower low. I'm looking for a lower high. And so maybe around 104.5, we'll have an opportunity to take it down. Done. So I got 2, maybe 3 more things on my to-do list today. Done. So I write all those things down, and then I can set them up using implied volatility. I can also use moving averages. I can also use pivot points. There's all kinds of things that I can use, right? So what do we want to do here? We only want to do dollar pair, let's say kitty CAD pairs today. Oops, come on, open up. And so we would go through and do our hit list. I can't remember which ones we said yes to, but let's just randomly do it, right? So what you would do on this case is only the CAD pairs that you saw opportunities would you put this into. So I'm overdoing it. I'm not filtering, right? You should filter before you even get here. So imagine you spent, that whole 1 minute and you said, okay, you're a bull CAD, you're looking for opportunities, you found the things that seem to be presenting possible opportunities, and now you want to go and do your applied volatility analysis. Okay. Am I going too fast? Well, you're a bull here and a bull there, so skip that. See, that's how you do those types of things. You just hit save. And, right, so here you go. Everything looks like the right time of day to be trading. You've already missed a couple of great hours of volatility. Okay, so Aussie CAD, this would have been a few hours ago, probably the implied 4-hour high, but at least it's at the daily high. So that this whole area here was a selling price. You're a little bit late, but maybe despite that, maybe the gods will be kind to you and give you another op. Okay, let's take a look. Pound CAD, again, probably already had your opportunity, because remember, hours ago, Tradars gave you the heads up, but now, maybe. So remember, these calculations have nothing to do with this big move here. Nothing. Okay, so it's just saying, well, based on what usually happens, the next level of volatility, which is just a sort of an average, would be up and then down. But it doesn't see this big move. It just moved things to the right. That's a pretty unusual move, right? Now, someone else might say price action, maybe it goes here. Well, that's very similar to what I just drew, isn't it? So maybe that's later today or tomorrow. Okay, probably later today, maybe London close. And we can go through this. How about Kiwi CAD? Same thing. You probably already missed the best move. You're too slow, son. Too slow. Okay. Okay. So again, maybe you get like one of these things. Okay. This is not looking at pivot points and moving averages and all that kind of stuff. This just, you're analyzing implied volatility selling prices. You're not looking for buying prices and all that kind of stuff. So you can write these things down and then go to your charts and do further analysis. Okay, CAD Swissy, lovely, tell your mom. Okay, what are we looking at here? Price action says here, implied vol says here. Okay, so based on what we see and the time of day, maybe you get a variation of this over the next 24 hours. Okay, and I'm done. Shut the back door, dude. All right, the coupon code. So you go to Get Started. You're talking about the one that saves you $600, Abdul? Without having to pay big money up front? See, this one saves you $600. But if you go here, Traders Pro Monthly, this only works for the next couple of days. I think it expires Friday. New Year 25. You hit apply and you save $50 a month for 11 months. 11 more months, right? So now you get the annual price, which many people here have paid. So thank you, annual members, for not getting pissed off. So you're getting the annual member price but paying monthly. And other people are adversely affected by that, and I'm critically aware. So this is not going to last long. I think I've sent 2 emails out in the last month. That's it. Maybe two. Maybe 2. So it's not a big publicized thing, and I didn't pitch it today. I was asked about it. So it's not for everybody. That's true, Jim. But, what about free months? No, there's no free. Okay? You can't even adopt a cat for free. You're giving your cat a new and better life, and it still costs you $300. No, there's no free. I don't believe in free. I believe in freedom, but freedom isn't free. Huh? No free. See, I don't even put a sales pitch here. If I have to convince you to become a pro member, you're not ready. You don't get it. No, not even 1 month. Not even 1 day. I don't believe in free. I just don't. If you haven't made a decision, don't sign up. Yeah, seriously. That's just, I've always been that way. If you're not ready to make a decision, don't sign up. Because you know what happens? Those people, and I'm sorry if you're one of those people. I'm not saying you, Richard, but somebody. They're the worst pain in the ass ever. It's the someone that signs up, let's say, for a $2 trial. That person will be the worst pain in the ass. I'll get 17 emails from this person. I don't know how to log in. I don't know how to turn the thing on. I don't know how to look at this. Can I? And then the person that pays the $300, they're golden. They're smart. They can figure it out. They can do it. They log in. They do the work. They show up on time. They're professional. Yeah. And then the person that signs up for $2, when it goes to bill them the $50, they don't have $50 in the bank. I'm like, dude. So I just don't believe in free. Yeah. Yeah, no, I know. Yeah. Yeah, so it's like I'm not interested, right? I'm not interested in cheap or free. But I'll tell you what we're building at Tradars.com is an epic product and service. By far a leader, right? By far. And it is expensive to build and run. So everybody pays. Yeah. Everybody pays because it's expensive. Why is it expensive? Because it offers incredible levels of value. Yeah. Meet technicals and fundamentals tab. So you click here, nothing happens? That doesn't make sense. It is a business. I'm a businessman. I always have been. But yeah, that doesn't make sense. So does it say you don't have access? Because that's not nothing. But if you click on it and it's just blank, that's different. Okay, you're blocking it. You have something on your machine blocking it. So it could be an ad blocker. It could be, I don't know, some VPN security software. It could be antivirus software. But if you get a blank screen, it's loading and you're blocking it. So as far after that, Hamid, okay. I can't help you, man. I honestly don't know. Yeah, try a different browser. Yeah, but something on your browser or on your computer or on your network or your internet provider, somewhere along the line, your setup is blocking it. Yeah. If you don't have access and you click on technicals, it'll say you don't have access to this page. Yeah. So therefore, I know it's working from us. We are supplying that to you, right? Mike, what was it about? Was it videos? Yeah, because I did get a new subscriber said, I'm watching the videos, but they're tiny. I had a lot of fun last night in the week on the street. Okay. Click. That was a good one. The menu. I liked it. And go full screen. Wait, let's do it again. And, wow, that isn't working. By the way, I think I'm glitching out right now. Or is that just started? Is that a new glitch? Because obviously that's not normal. I had a lot of fun last night in the week on the street. Yeah, just go picture in picture and then expand it. I don't know why the other one is popping. Yields are still going up. The market's thinking that this 10-year yields could go to 5.0, but then guess what happens? Then people start buying. See, it was working fine then. And then it comes right back down. Okay, so that's how you do that. You can also speed it up. You can cast it. You can download it. Okay? Oh, it's killer. I'll show you, like, when you do the picture-in-picture. Let's make it small, but not that small. Okay? All right, let's watch the recording and go through our trades. Oil all the way to 75-ish, not quite. Here it shows 74.5. Gold not really doing much. S&P 500. We got the vol. See, you can do your analysis while watching the video. Was it yesterday? It just floats. I guess so. About NVIDIA. Do you remember the whole pop and drop? That's kind of what happened. Pop, drop. Hey, look, everyone's buying NVIDIA. So. Yeah. Cool, right? This is what we do every day. So the people that waited to the last second. That's how it works. Okay, so that's that. I'm glad we had an opportunity to cover that. I got a Microsoft update that dropped everything. And now on this machine behind me, and now that machine, its internet adapter is now not working because of the Microsoft update. And so I have to piss around and spend probably an hour and a half to get that up and running. I haven't even taken 2 minutes to have lunch. I don't have an hour and a half to piss around. So, yeah. Terrible, huh? But I think my computer's glitching anyway. So, you know what? Let's call it. Because I want to reboot this machine and all that kind of stuff. But how many people here are attending today's event? You know what? Let's do a poll. Okay. How about this? Did you RSVP for the 2025 Outlook at noon? ET. Okay, question mark. I want to see how many people are going to attend. And this is the sign-up link. What's up, DP? This is serving as a reminder here that this is happening. Are you coming? It's at noon. Let me show it to you one more time. Right? I actually have a real presentation. We're going to look at the history to understand the future. Oh, Richard, that's easy. Dude, that's the easiest thing. Yeah. I missed it by 12 points this year. Did it 11 months in advance. Like, that's not hard. The why is much more interesting than the what. Right? Oh, thank you, Donnie. Yeah. Yeah, if you don't know how to do like a target, then you just don't understand technicals. That's the easiest part of trading is technical analysis. But you can ask me and I'll do it. It'll take me I don't know, 30 seconds to give you that number. But I'll explain to you, right? So look at this. Trade wars versus monetary policy, a market-moving battle. Analyzing how tariffs and Fed decisions shape U.S. markets in the past. So then I can ask you, once you understand what happened in the past, then I'll say, well, what do you think is going to happen in the future? Do you think it's going to be, up, down, or sideways? And you can give me the answer, and then I'll give you your target. You're like, Wayne, I think it's going to be more sideways than up. I'll give you the target. It's like, that's so easy. If you're like, no, I think it's going to be generally great. Like, my dad thinks the stock market's going to rally big time. Okay, great. Great. So I'll say, Dad, well, here's our target. Here's your conservative target. Here's your aggressive target. Couldn't be easier. Right on, Keefe. Yeah. Yeah, Kevin, my pleasure. The thing is, like, I'm going to go through these 30 or something slides, whatever it is, but there's 170 slides that I made. I'm guessing probably 100, 200. There could be more, could be less. But the thing is, how to describe it was a real challenge, and what do I want to include? And so I'm making some changes. Usually it's very, look at this chart, look at that chart, look at this chart, look at that chart. And I decided to use a narrative this time. And so you can get a feel for the past, not just look at a bunch of charts. Yeah. And then whatever you guys want to talk about, we can talk about. Yeah. So if, like Pavel says, yeah, the stock market's going to go up. See that we're all going to have different opinions. And we can find a lot of people that are also going to say, no, it's going to go down. Great. Targets, easy. Okay. I mean, that's, you see these idiots on CNBC, and what they'll do is they'll send out a press release that say they think the S&P 500 is going to go to 8,000, and which is wildly bullish, wildly crazy bullish. And then CNBC brings them on TV to talk about it. Meanwhile, it's complete nonsense, utter nonsense. It's just BS, clickbait. Yeah. So, hey, it's going to go to 8,000, everybody. Isn't that amazing? You should pay the $50 and I'll tell you why. Like, dude, you can see it's just clickbait. No, I'm going to give us... So I spent all these hours going through history. Let me just say, it's not as simple as Trump, Trump, Trump. This is what everybody wants to talk about. There's a second part. There's a key piece. And these two pieces come together to create a reality. And I think most people are going to miss the second piece. So there's some really good intel here. Because, let me tell you, 2017 and 2018 and 2019 were radically different years. Radically different. And if you don't know what shaped those years, you're not going to do well in the next couple of years. So I will not give you my opinion, but I will help you shape yours and know how to set up those trades. Look, it's not bad, right? It's not bad, right? It's not bad. Okay. So I see a lot of people when they talk about Trump, they just talk about what they think. They talk about their opinion. He wants this, he wants that, this is good, that's bad, this is this is that. Whatever, bro. and I say this to friends and family too, I'm like, whatever. I look at the charts. I look at the economics. I look at the reality. I go into this with the confidence of allowing reality to happen. And my goal isn't to beat the market. My goal is to understand what's happening so that I can adjust accordingly. I'm not here to be better, smarter, or righter than everybody else. My job is to make money in all scenarios. And so if I don't understand what's happening, there's no way I can adapt. I'll always be reactive. So when you were in school, you probably read Darwin. Unless you live in southern Georgia, Alabama, or Mississippi. Sorry, that's not fair. All right, most of you would have read Darwin. And you were taught survival of the fittest, which is absolutely, totally wrong. Now, Darwin wrote that when he was 20, and it made him famous because people wanted to read his books. He went to some crazy faraway island that no one had seen before, and there were dragons on the island. Komodo dragons, yeah. And all kinds of strange creatures from a faraway land. So he wrote a book and he got famous. Great! But then he continued studying for the rest of his entire life. And then when he was an old man, after spending another 40 years of doing his whatever he does, you know what he wrote? He was wrong. It's not survival of the fittest. It's the species that can adapt to change quickly. So, that brings us to us. My job is not to be the biggest, fastest, and get richest, quickest. My job is to see reality and adapt more quickly than everybody else. And I have to have a strong conviction, a strong opinion, but a weak conviction. I know exactly what I want to do, but I also know exactly when I'm wrong. That's my job. So this is why I want to do the history lesson and conversation. Correct, Mike. That's the secret to survival. And nobody read Darwin's second book. So not Origin of the Species. So everyone has been taught the wrong thing, but welcome to the world. Okay, welcome to the world. Most of what you've been taught isn't quite truth. It's not a lie, it's just most people don't really understand history, and history very often gets rewritten. So, like, for example, everything you learned about World War I is wrong. If you took my oil trading course, I discuss that in great detail. And you're like, yeah, Wayne, that makes more sense. Wayne, your version of the story makes a heck of a lot more sense. Oh, but Archduke Ferdinand was shot in Sarajevo, so the whole world went to war. Millions of people died because of the assassination of Ferdinand in Sarajevo. Really? You believe that? Really? Well, that's what's in the textbooks. Really? Okay, dude, he must have been a heck of a guy. He had a lot of friends, huh? 20 million people willing to die for that guy? Well, economics is a study of scarcity and our response to that, Richard. So, yeah, it's also it's an adaptive model, right? Economics. There are a lot of things that we do understand about economics, but also the one thing that messes up like basic economic models is intervention. Okay? Intervention. And so when the government or central bank gets involved, the models break down because part of scarcity is always going to be like, well, supply and demand. And then your adjustments. Oh, this is too high. I really need that. Oh, there's not enough of this other thing. So you come up with strategies and you respond. And there's action, reaction, and adaptiveness, right? But, right? So if, like, for example, what does a recession do? Well, it pulls inflation out of the economy. There's too many people too rich because there's irrational exuberance. So capitalism, aka the economy, needs to reset. And if you have banks that are lending money to people that are not qualified, then the bank took too much risk. Why'd they do that? Well, the central bank maybe lowered interest rates to the point where they had to take the risk to make any profit. And so it's partially the bank's fault. It's partially the central bank's part. Maybe there's something going on in the economy and whatever. So now the economy goes into recession, but the government doesn't want the recession because the voters are going to get hurt. So then the government gives out free money and like, Jesus, criminy. None of this is economics and capitalism. Capitalism would say the bank should go out of business if they were a bad bank. If you borrowed money that you can't afford to pay back, you should go bankrupt. But there's a moral hazard where you're not going to lose your house and live under a bridge because you were stupid with your credit card. No, you can just hire a lawyer and wash it out. And the bad bank that lent you money or the bad credit card that lent you money, whatever. They'll write it off. They have insurance. They're not going to get shut down for being a bad business. And if they run into financial trouble, shoot, the government will just bail them out. See, none of that is capitalism. Capitalism is if you're a bad business, you go out of business. If the world changes and you don't adapt, you go out of business. See, all of that is Darwin. You're not fit, you die. You don't adapt, you die. But the government gets involved and says, well, then people will get hurt. Stockholders will lose value. Yeah. Well, they made piss poor decisions. They should go out of business and people should lose money. But the government intervenes, you see? So I sound anti-government. No, I'm pro-capitalism. Okay? So I want you to equate things to that. A bad bank should go out of business because they're bad. And a good bank should take its place. And ideally with better technology, better customer service, better experience for the customer. Capitalism is extremely pro-customer. Now, some people say, well, they're anti-worker. That's not quite right. That's not quite right. Okay? That's a spin on socialism. See, if you are going to be the best business with the best technology, the best customers, the best service, you need the best employees. And capitalism doesn't care how tall you are, how short you are, what sex you are, what sex you were, who you have sex with, what religion you have, what color your skin is. Capitalism doesn't care. If you're the best person for the job, you are hired. Can you do it? Yes, I can do it. Great. Well, then you're on the team. Capitalism is not racist. It's inclusionary. If you're the best woman for the job, you're hired. Okay? If you need 10 minutes to pray to your God, well, yeah, that takes time out of work. But if your productivity is high and you're adding value to the company, by all means, pray to your God. Get her done. Just get your work done. And don't burn food in the microwave. And you'll be able to stay at Wayne.com. Okay? So everything else is an intervention to capitalism. Capitalism is pure. You don't make money, you're fired. That's it. Yeah. That's it. That's how it works. So anyways, enough of that. So if you want to attend, today there is still a few hours. Look how beautiful it is. I'm going through it. Oh my God, it's so nice. Look at all this. Look at, look. Ah, it's nice. So I hope to see you there. Last chance. Okay. For sure. Well, Maida and I, we can stand on a stage and say, well, maybe capitalism isn't the best economic model in the world, but Maida and I can share from her life experience and my traveling experience. Socialism is a complete failure in every sense. It's bad for the economy. It's bad for the people. It's bad for trade. It's just bad, bad, bad. Nothing works. The only good thing that I saw was because everyone was equally desperately poor, that there was no classism because there was no rich people. Everyone was poor, so everyone's in the same class. And there's a lack of racism, right? There's just, and there was basically a lack of crime. But now, if the country totally collapses, my fear is criminals start running, new criminals start running the country. So capitalism isn't perfect, but having studied the history of economics, there has not been one instance of socialism working. Unfortunately, communism can work, but is not working now. So maybe the socialist part of communism for China is kicking in. Well, we'll find out. But I think they're just repeating Japan. So anyways, socialism has never worked, and capitalism does have a track record of success over and over and over and over and over again. But is it perfect? No. And so I believe over the next 100 years, we will make adjustments to it. And I've offered Harvard a few pieces of advice. And so it just shows that it will improve. We can improve capitalism. It's been an experiment that hasn't been around that long. Yeah, like even in the 50s and 60s, people weren't sure. We were willing to go to war over it. People weren't sure. Now we're sure. If you want to look at like the newer form of democracy obviously started with, the Greeks, let's say. But more modern city councils, for example, formed after the Black Plague in Europe. And I wrote a whole paper on how the best thing to ever happen to Europe was the Black Plague. I'm not going to go in the diatribe of why, but it allowed entrepreneurialism, which then created a business class, which then created city councils, which then created democracy in Europe, well before the French claimed to have done it. Yeah, interesting, huh? Well, Lucas says it would be good if you can keep intervention out. Well, let me just comment on that. We sort of tried that a little bit in the 1800s, between 1800 and 1910. We had some pretty nasty booms and busts. We even lost our central bank. Yeah, we actually had a central bank and then we lost it. Only because it wasn't really a good central bank. It was powerless, almost like the ECB. Sorry, Europe. But anyways, the boom and bust was very painful. Yeah. The boom and bust was very painful. So in the 1850s was the third Fed. Before that, there was a second Fed, and before that, there was a first Fed. So, we kind of got closer to our more modern Fed around this time, right? Like the current one. And the booms and busts were terrible. That's why JP Morgan got his friends together and created the central bank. But then when we got into, so the central bank by design is supposed to intervene through credit. So it intervenes to, like the dual mandate says, to manage inflation and control the economy. Okay, so that's the first thing. And that was the first time the central bank in the United States ever really had that kind of control. JP Morgan's dad, by the way, was a governor at the Bank of England. So a family of bankers now, right? All right, so then fast forward to World War I, the veterans, not veterans, the veterans come home. And, it's really tough on the economy. And a lot of people need a lot of help. There's a lot of veterans were not employable physically or mentally or emotionally. And it was quite a shock on the economy. And so the government now gets involved. So for the first time in the history of the United States, we start to analyze things like how many people are looking for a job, what is the unemployment rate? See, it wasn't a government problem. There was no unemployment insurance. If you didn't have a job, well, you better get a job if you're going to eat. There was no unemployment benefits or insurance and all that kind of stuff. So it wasn't even that data wasn't even gathered by the government. Interesting. They also noticed in World War I that they didn't know how much food was available because they decided, well, we're going to support the war effort. We're going to start sending things like wheat and dairy products and beef products and chicken products and oil and rubber and tin and all this stuff to support the war effort. But the government didn't know how much wheat we had. We didn't know how much corn we had. We didn't know how much rubber was available. We didn't know all this stuff. So the government wanted to get involved. And so we started tracking all of that. This is where the CFTC Commitment of Traders report comes from. So all of a sudden, the government was taking on more and more of a role. Oh, you don't have a job? We need to take care of you. Right? You don't have a place to live? We need to take care of you. You need medical? We need to take care of you. And then we hit the Great Depression, and the government expands its reach even further to say, well, now we have millions of people out of work, millions of people with no money, millions of people starving. So the government steps in. And so it went from nothing pre-World War I. The government didn't care about any of this stuff. It wasn't a government role. You're hungry, don't have any money or food, and need a place to live? Go to your church. That's what America was like. And then suddenly, after World War II, unemployment retirement, so things like, well, what do you do with the returning veterans after World War II now? What do you do with them? And so because in a generation you went through World War I and World War II. So now we need government retirement plans, and mortgages are developed, all this kind of stuff, right? And so everything changes over that period of time. So, Lucas, what I'm saying here is there was a time of no intervention, and it was very painful. Boom and bust, boom and bust, boom and bust. And the booms were great, but the busts were terrible, and they stayed around for a long period of time. Like the Great Depression, 10, 12, 15 years, depending on when intervention started to happen, right? And then we get to a point where, in many people believe, the government's too involved, right? That the Fed runs the stock market now. And Trump is going to run the market now. And, now we have competing forces, and this is what I want to talk about. They both think they're running the market. So we have dueling personalities right now. But a lot of people would say, well, the Fed and the White House have too much control, and they should allow bad banks to fail instead of bailing them out. So what I guess I'm saying, Lucas, is, you don't want none, and you don't want too much. Right? Well, so Lucas says, have you ever seen a government program grow away? Well, what happens is the government fails and someone comes up with a better model. Unless the society or the government itself is smart enough and willing to actually represent the needs of the people and say, all right, this is a shit show right now. We got to change everything. And it's going to be terribly painful for the next 4 years, maybe 8 years. We got to slash and burn government programs. We got to slash and burn our debt. We need to, increase our credit rating because we pay down our debt, right? We got to raise some taxes to do it. We got to cut some spending, but you don't want to do it with too much austerity. So now you got to balance all this, but you got to say, as a society, as a representative of our society's, needs and best interests, we are going to pay down the deficit by 50% in the next 10 years. It's going to be hard. It's going to be difficult. We're going to be sensitive to what we can do, but people will be hurt. But they didn't complain when they were benefiting the last 50 years. So now we got to reboot and reorganize the corporation we call America. But, many say that won't happen. Yep. The cool thing is it's totally doable. But every time in history up until now, governments don't do it, and they do fail. Cool. Well, I got to go. That was really cool. Thanks for hanging with me. I'll see you in about 3 hours. 2/3 of you said you're going to be there. Hey, it's only $50, and it's not $50 for today. It's $50 for today and the follow-up next quarter, then the next follow-up the quarter after that, and then the follow-up after that. It's only like $15 per presentation, right? It's not even $15, right? That'd be $60. So anyways, dude, it's not very expensive. I think it's a good conversation for us to have. And I think it'll be informative by going through the details of what has happened, not what Wayne thinks. What Wayne thinks is irrelevant. What you think is relevant. And so I will set the stage and provide a framework for you to think about 2025, because we're going to come back and talk about it. We can look at 3 months from now, we're going to look at all the new data, and we'll know what Trump did and by how much and to whom and what the retaliation was or is. And we can start analyzing that kind of stuff so that now, because of what we do today, you'll have a context. Oh, Richard, that again, that's all in the training courses. That's easy. And like I said, that's the easy stuff. Okay? But if you don't know, if you don't have an opinion on what the market's going to do, then there's no way you can do the projection. So like I said, Richard, if you said, oh, this year's going to be bearish and we're going to end lower, I'll give you the prices. That's it. It's that easy. But if you don't have any opinion and well, if your opinion is based on your gut feel and your think and all that kind of stuff and what some idiot on Bloomberg said, no, that you're doomed. But I will go back and I'll show you the facts. That's the difference. You know what I mean? That's the difference. Let's go back and we'll look at the facts. We'll talk about the facts. What made changes? What made pauses? What made changes to the changes? So that we can look for these things in 2025 and 2026. And you'll recognize what's happening, when it's happening, and you'll be able to adapt while everybody is hoping and praying. And you know, all that nonsense, right? Cool. So that's what we're going to do. And I'm super excited. I'm going to pull up some more Fed stuff and just kind of, before we do this presentation, this is part 2. Part 1, we'll go through the reality. And I have a bunch of stuff I pulled up at the Fed. Pulled up, I mean, created and generated. But so we'll start with that. And don't let me forget, I want to take you through the recent upgrades to Tradars.com just to make sure everybody knows about them. And a new feature I'm unlocking. Who's going to remind me to show the new feature? Many of you have already seen it, but I'll show you what will be added to the site. Who's going to remind me? I'm going to forget. Cool. Yeah, I think most of you have already seen it, but at least I'll unlock it. I'll give you a link that'll work, and then I'm waiting for the developer to pop it in, but it'll be look-atable. Is that a word? Look-at-able? Yeah. Cool, right? Yeah, if I don't know something, I ask Denise first. Hey, Denise, when's the next COT release? 13th. Yeah. Yeah, Denise will know. All right. All righty. So, peace on earth. May the pips be with you. May your profits be above average. Last chance. Okay. Prices are going to go up to $5,000. You better hurry up. Sign up now. I haven't quite decided if I'm going to do it to $5,000, but I'm thinking about it. You better hurry up. I'm thinking about changing the price to $5,000. Yeah, think of the amazing value. You're going to get, if you sign up now, you're going to save 99.9%. Isn't that amazing? But I haven't decided yet. Maybe I'll just leave it $50. We'll find out. And yes, you'll have 7 days to watch the recording. So even if you can't attend today, you have a whole entire week. And then the recording goes away. So let me say it again because you can never say it too much. Peace on earth. May the pips be with you. May your profits be above average. Bye-bye. That just happened.